Tax-free cash growth warehouse, nuts and bolts. Financing things with the infinite banking tax-free cash growth warehouse strategy.
Aloha, I'm Stan Cox, principal strategist and broker with SC Finance Strategies and Insurance Consultants, or SCFSIC. This is self-financing things with the tax-free cash growth warehouse strategy, or TFCGW. This example of the tax-free cash growth warehouse strategy is the simplest, most straightforward, uncomplicated application. It's also my personal experience. This is the actual scenario where my wife and I first put the infinite banking strategy to the test. It was after this first experience that I began to formulate the full tax-free cash growth warehouse strategy, which incorporates a personal sweep account and cash flow principles, but as the proverb states, a journey of 1,000 miles begins with one step. So, let's get started.
Buddha is credited with saying, thousands of candles can be lighted from a single candle, and the life of the candle will not be shortened. Happiness never decreases by being shared.
You might be able to relate to this. Over the past few decades, I've used credit cards and bank loans as a means of financing things. Things like cars in the case of bank loans, and furnishings and gadgets in the case of credit cards. The bank loans are typically amortized loans where the interest is calculated for the whole term of the loan and then tacked on up front. And revolving simple interest loans are where the interest is based on a set APR and calculated on a daily basis on the declining principal of the loan. Amortized bank loans have been as low as 3% and up to 8% in my experience. But of course, the advertised rate is never the actual amount that you pay. Credit card interest rates are all over the place, but I've never had one with less than 10% APR. What I'm about to share with you here is the first way that my wife and I actually tested out the tax-free cash growth warehouse, or TFCGW strategy. And it's a great way to get your feet wet and experience the beauty of it for yourself. In my case, my wife and I each had a small whole life policy with a mutual company, and we had built up a little cash value in our policies. Then I learned about the infinite banking concept through Nelson Nash's book, Becoming Your Own Banker, the Infinite Banking Concept. After more research and study, we decided to try the strategy out. We were in need of a new sofa for our living room, so we began the shopping adventure. We found the perfect sofa for us and looked at the financing available through the store where we found it. They would be happy to open an account for us at 24% APR. Come on, be serious. We each had more than enough cash value in our accounts to pay for the sofa, so we decided to go ahead and take a policy leverage loan from one of our accounts. I called the home office customer service department and requested a loan for the amount needed. We got the check in the mail about 5 days later, and we went to the store and bought the sofa. I'm going to round out the numbers here for ease of calculations. And I'm using a sofa for this example. It was our actual example, but it could have been a stereo or home theater TV with surround sound, or a whole house full of furnishings. Doesn't matter. The strategy and the calculations are the same. For our sofa, we needed $1,300, including tax. As I said, it was our first experience using the TFCGW strategy. And as with many first things, it's often good to go slow and test it out in order to get comfortable with it. The policy loan simple interest rate was 5% APR. Our plan was to pay back the loan within a year at just over $100 a month. Because the interest on the policy loan is simple interest, calculated monthly as we pay down the principal, the total interest we paid over the year was just $41.
Had we financed our sofa through the store we bought it from at 24%, the interest would have been $312 for the year. So just by taking advantage of the low 5% simple interest through our policy loan, we saved $271. Now, considering the $1,300 loan only, and not the entire balance of our cash value at the time, there was dividend interest credited to our TFCGW account. We'll use the current rate of 6.2%, which would be $81. At the time that we took the policy loan, the dividend rate was actually 7.1%, so the actual gain was more. So far, by these calculations, we're $351 ahead of where we would have been had we financed through the store. Savings and interest plus gains via dividend interest. Now, using the 6.2% as the opportunity cost, had we paid cash out of pocket for the sofa, we saved and therefore gained another $81, bringing our total advantage to $433 by using the TFCGW strategy. That's like giving ourselves a 34% discount on the sofa. But wait, there's more. Yes, we borrowed $1,300 against our cash value in the policy, but now at the end of the year, we had $1,381 in there, and it just continued growing. In addition to that, we saved $271 in interest that we were able to use for other things, like going out to dinner, buying gas for the car, or paying other bills, etc. But when you consider that we had financed the sofa through the store, our total cost, including the principal cost of the sofa, plus the financing interest of $312, and then the added opportunity cost of $81, cost would have been $1,693. Instead, by self-financing with the infinite banking TFCGW strategy, not only did we save all those costs, but we got the sofa, and the balance in our account grew. Considering only the $1,300 price of the sofa and not the total balance that we started with in our account, when you add up all the savings and the gains, we actually came out ahead by $3,074.
Every time we put the strategy to use, we're gaining money and we're saving money. It truly is like adding 30% or more to our income. And remember, the gains by means of dividend interest are tax-free. Look, there is no downside to the TFCGW strategy. The more you use it, the more you gain from it. Simple as that. This example is from our personal experience and is included as Chapter 1 in the book, Tax-Free Cash Growth Warehouse, Nuts and Bolts, available on Amazon.com. Again, this is the simplest and most basic example of infinite banking TFCGW strategy in practice. And while this particular example is financing a piece of furniture, the strategic application applies to anything you want to self-finance. To get an even clearer perspective of all the advantages of self-financing with the tax-free cash growth warehouse strategy, how avoiding financing fees and opportunity cost, combined with earning compounding interest tax-free, watch our free 60-minute webinar, How to Become Master of Your Financial World. Just click the link in the description box below here. At the end of the webinar, you will be prompted to apply to become our client. We're here to help you. But just like that journey of 1,000 miles, it's up to you to take that first step. So go ahead, leave a comment or post a question here. And if you liked what we shared here, subscribe to this channel. There's a lot more good stuff coming. Aloha for now.